Hey everyone, this is Dan with Data Trend. Today is Friday, April 8th, 2016. It's about 2:30 p.m. or so Mountain Time here. The market's closed a half hour ago. We're taking a look at a daily chart of the S&P 500 index, the SPX. The market closed today at 2047.60. It was up 5.69 points or 0.28%. What we kind of see in here is a continuation of this sideways action. We talked to yesterday a little bit about all of these overlapping candles that we're seeing, and we're just seeing kind of a continuation of that for the time being. Um, and what it kind of looks like is that the market is just kind of digesting some of the gains from this recent move up from early February or so, and it's just chopping about. There's no real clear direction here, and for the time being, it just seems like it's digesting the move, and we'll have to see over time whether it decides to resolve itself higher or lower. Certainly, there's the potential for the market to pull back slightly lower and still even remain within this shorter term uptrend. It could come down here to test, say, the 200-day simple moving average around 2015, and we also have the rising 50-day moving average down here now around 1975 or so. It's hanging out here, close the day here, right around the 20-day simple moving average, but there's no real direction in here, and I wouldn't say that it seems like the market's getting up to go higher, and it doesn't seem like it's really willingly breaking down to head lower for the time being. It just seems like it's churning and chopping about and trying to figure out what to do next or digest this move higher. If we drop down to the shorter time frame, the 65-minute time frame, what we're looking at here is the 5-day simple moving average is the yellow line, and the red one is the 10-day simple moving average. And so we do have the 5-day crossing below the 10-day today. And at the same time, we don't see any real significant movement lower. The market does seem to be pushing up into this 5-day simple moving average, finding some resistance and selling off from there a little bit. But for the time being, this 2040 to 2043 level that we keep talking about keeps coming into play. The market opened higher this morning, and from there it traded steadily lower. It came up to that 5-day simple moving average, sold off throughout the day, but it came down, and again at this level, this 2040, 2043 level that we've been watching, that's where it found a little bit of support and it pushed higher. Yesterday, it came down to that level and it finally broke through, but it quickly reversed back up and above that level. And so for the time being, this level is essentially still holding. We haven't seen any sort of a deeper pullback, and this is really a pretty minor pullback, in the context of the move higher that we've had here over the last little over a month or so, a month and a half, I guess. And another thing that I kind of wanted to point out here is it seems like the market has been consolidating for a decent period of time. And we talk about this sort of this neutral to slightly bullish drift. This is kind of what I'm talking about here. You see, we have this pattern of a higher high here, a higher low, a new higher high, but then the market kind of falls back and it drifts lower, and maybe there's a lower high in here on the 65-minute time frame. Maybe this is a lower low, but it's not really picking up any speed on the downside. It's not violating some of these more key levels, like down here around the 2020. Remember, we have the 200-day simple moving average around 2015. Certainly falling below that, finding resistance and turning lower from there would be very bearish. But for this time being, the market seems generally bound kind of by this box right around the 2025 all the way up to 2075-ish area. And it's just kind of drifting in there. So for now, the bias is somewhat sideways to slightly higher, and we'll just have to see how it continues to play out. Let's hop over and take a look at the April 5 CIB. So a couple days ago, we converted this trade to a broken wing butterfly, and this is the position as of the close today. So with the market here at 2047.60, we have a delta of negative 1.93. The gamma is negative 0.11. Theta is about 1859. The Vega is negative 50.93. And the open profit at the close today is about $152 and some change. And so we're just sort of sitting in this trade, and as long as the market continues to chop about, let me just grab the numbers for that range again. The range that we're talking about, 2025 to 2075, so that's somewhere in the neighborhood right about here to right about here. And for this position, that's really a pretty nice place to be. So if the market was to continue to drift back and forth sort of within that range for the time being, we'd have a little bit of time for this position to work, and hopefully we could sneak out if they step that forward. Maybe we can sneak out sometime next week. We'll just have to see how it plays out. But the trade is getting pretty close to expiration, so we are keeping an eye on it, and we don't want the market to break out to new highs and take off on us. This position has right now about 21 days to go. So we're getting pretty close, and we're going to need to think about getting out of it. The other trade that we have on is the June 1 BWB, and we'll take a look at that here. And this position is essentially unchanged, just kind of sitting around. We have two flies here. One is centered here around 1995, the other centered around 2010 or so. The market closed here at 2047, and the delta on the trade is negative 2.56. The gamma is negative 0.04, so very low. Theta is about $10 a day. The Vega is negative 61.76, and there's an open profit today at the close of about $18. So it looks like a little bit of the money came out of this position today, but it's still relatively early in this trade, and it's just kind of chopping about. Right now it has, I guess here, 56 days to go. Let's go back over to the charts here as well and just take a look quickly at RUT. The pattern that we're seeing in RUT is relatively similar to SPX, and so there's really not even that much to add. On SPX, we were talking about that range from 2025 to 2075. On the Russell, it seems like we're looking sort of at, this area about 1065 up to 1120 or so. So a bigger percentage range, but still the market's been generally contained within this area of consolidation or balance for the past little bit here, going all the way back to early March. And so that's been about a month. And SPX is the same thing if we were to go back and look at the dates on that. Dropping down into the shorter term time frame here on the Russell, we see the same type of thing. We see these little higher highs and then the market pulls back. And so the energy here has been lower, but there is sort of a neutral to slight drift higher, and it's fairly evident. So even if the market starts getting up and above these 1106, 1110 levels, it does have the potential to fail up here at 1120 just because it's kind of in this period of chop. Now, certainly getting up and above and holding above that 1120 area could get it sending it higher, but for the time being, we haven't seen that happen. And after a move this size, we would expect kind of to just see the market consolidate and pause and think about the move that it's just made. But for the time being, it seems like that's what we're seeing in both markets, a lot of overlapping candles and just some consolidation or balance. So at any rate, that's all I have for today. Hope you had a good week. If you have any questions, of course, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.